Just a quick warning. By the end of this video, you're probably not going to want to have as much money in your bank account as you currently do, but you'll soon see why that's a good thing. What I want to do is compare what you would have today if you put $100,000 in a bank savings account in 2000 and if you put $100,000 into gold into 2000. I mean, gold is just an insurance policy, right? It's just a hedge against inflation. It's not a real investment. That's called sarcasm, in case you didn't detect it. And considering all this, gold probably only did a little better, right? You tell me when we're done with the number crunching, and we'll take it from there. So all of these numbers are going to be assuming we put $100,000 at the beginning of 2000 and ended at the end of 2023. Let's start with a bank savings account with a large company like Chase. We have to estimate the annual percentage yield, or the APY, on the savings account just because I couldn't find the exact numbers. But I promise I'll be generous for all you bank savings people. We will overestimate to make your bank account look a little fatter. I feel like my wife used these tricks on our bank account. Remember, we need this number to calculate the money the bank is paying you in interest to have that money in the bank. Oh, by the way, subscribe. Although, asking you to subscribe probably makes you want to subscribe even less. Just subscribe. So the average APY in the early 2000s was between 1 to 2%. Following the crisis of 2008, they dropped to below 0.25%. In 2009, they averaged 0.21% APY, but fell to 0.17% in 2010, and then 0.11% in 2011. Interest declined year over year until 2013, then remained steady at 0.06% APY through 2017. From 2018 to 2021, national average savings rates fluctuated between 0.01% to a staggering 0.1%. If we take a look at the current APY from Chase, we can see it's at a whopping 0.01% APY. So to help you understand just how low this is, you would get paid $10 in interest for the year for your $100,000. Factor in inflation and you lost a few grand. If we take the average of all these years from 2000 to 2023, we're probably at like 0.25% APY, and that might even be high. But I promised I'd be generous for all you bank savings account loving nut jobs. We will say the average APY over the last 23 years has been 1%. Let's do some calculations with the help of the awesome AI technology, ChatGPT. So we can see this formula here where everything is taken into consideration. This includes our initial $100,000, or the principal, a 23-year time frame from 2000 to 2023, and a 1% compounding interest. When all is calculated, you can see that we would have a total of $125,716 in our account. So we actually made a little over $25,000. Well, not so fast. We haven't factored in inflation, so let's do that. Again, we used our friend ChatGPT to help us determine what that value would really be today. So we used the formula. Adjusted value equals the future value times CPI in base year over CPI in future year. After our calculations, with some estimations thrown in, our $100,000 is actually worth $75,000. Yikes. So what initially looked like a $25,000 gain was actually a $25,000 loss. And that is a quick lesson on the hidden tax of inflation, my friends. All right, time to compare my friend, gold. So let's now say we put $100,000 into gold in 2000. And look, gold sucks, right? Again, there's no interest paid. It's just a hunk of metal, so the gains will probably be similar, probably maybe even less. I really don't know what type of idiots invest into something that pays no interest. But let's look into it anyways. The price of gold in 2000 was about $282 per ounce. This means we could have purchased about 354.6 ounces of gold. Great, 22 pounds of worthless metal, right? So to find the value of this gold in 2023, we didn't need ChatGPT, but I used it anyways because I like it. So the simple formula to calculate the value is the value in 2023 would equal the amount of gold in ounces got in 2000 times the price of gold in 2023. The current value of gold at the time I'm shooting this video is $2,063, but we're going to estimate down and use a nice even $2,000. By the way, we want to make this useless junk called gold look as bad as possible. So when we take our 354 ounces of gold from 2000 and times it by the current price of $2,000, we get a value of around $709,000. Wait, hold on. That can't be right. That's like 6 times more. No way this worthless metal that pays no interest and hasn't even done much over the last 10 years did 6 times more. All joking aside, let's see the value after inflation. So I quickly threw this back into ChatGPT to get the value of our gold with inflation. And we can see that we have about $424,000 after inflation is considered. So what's the final tally adjusted for inflation? Bank savings account with $100,000 in 2000 has about $75,000 in it at the end of 2023, of course, with inflation considered. $100,000 put into gold in 2000 is worth about $424,000 at the end of 2023, of course, with inflation considered. That's over 5.5 times more than the bank savings account, or $349,000 more. And look, you want to make these numbers even more glaring? Let's use $1 million as an example. With $1 million, you have $750,000 with a bank account after the 23 years. You got $4.2 million in gold over the 23 years, for a difference of about $3.5 million. That is some serious cake. So, what's the moral of the story? Stop holding large amounts of money in bank accounts. I typically keep about 3 to 6 months of my cash in my accounts, with a little more in my business account just to account for my expenses. And look, stop letting financial advisors talk you out of gold. Gold has not only kicked the crap out of bank savings accounts, gold has also beat up stocks and bonds this century. We can see the average annual returns on gold are about 9.5% since 2000, whereas the S&P 500 is about 6% and bonds are about 5%. And this is exactly why I recommend people roll a portion of their traditional 401k into a precious metals IRA. It's not just an insurance policy, it also makes you money. And so far this century, it's made a good amount more money than a traditional 401k, even with the gold prices not being much higher than they were 10 years ago. I mean, gold is due for a serious bull run, especially if you consider the current financial landscape. If you're interested in a precious metals IRA, the company I use is in the description below. If you click the link and give them your name, email, and phone number, you get their free kit, which is it's awesome. I mean, it's very eye-opening. Or if you're just interested in purchasing physical precious metals, the company I use for that is also below. Now, my goal with this video was to help all the old me's see the light, because this is something that I used to do religiously, is keep a whole bunch of money in a bank account just because it felt good. It felt good to have that cash on hand, and I didn't realize how much money I was really losing. So with that said, hope this helped. Subscribe, stay informed.